Hello friends. So after having studied a lot of topics of audit in detail, today's topic of discussion I've taken up is company audit. This is a very important topic from the IPCC syllabus, and of course a detailed understanding of each of the concept will help students at the final level too. Before starting up with company audit, I want you guys to understand how does audit work in a company form of an organization. Now we know that in a company, when it is registered with the registrar, it has its common seal. It's a separate distinct entity. Now this entity takes money from the people. There are IPOs, then there are borrowings from the banks and NBFCs, and then it functions. So I've taken up, for the example, we've taken up shareholders. So shareholders invest their money in the company. They are the one who lends the money to the company. Company uses that money to perform its function and then make profits and revenue. So shareholders are investing money in the company, so the company is accountable to the shareholders. Now shareholders want a third party review or a third party report to increase their assurance, to increase the degree of confidence that the money are being utilized by the company in the manner that was supposed to be utilized. They cannot solely depend upon the management's report, they cannot solely depend upon the management figures. So what the shareholders do is, in order to keep a check on the company, on the company's performance, they appoint auditors. So auditors are the third party, it's an independent entity that reviews the accounts, documents and papers of the company. So the shareholders have appointed the auditors. Auditors review the records, documents and papers of the company. They submit their auditor's report to the shareholders and the shareholders rely upon that report. So there's a tripartite agreement in an audit scenario of a company. Tripartite, why? Because we have a company, we have the shareholders and we've got the auditors. Auditors, as we discussed, is an independent entity. That means they do not come from the company. They are not somebody from the management. They are not an officer or an employee of a company. Neither do they come from the shareholders. That means auditors do not hold a financial interest in the company. The only interest of the company will be the fees that the company is giving to the auditors. Otherwise, it's an independent entity. Its judgments is not influenced by the wishes of either of the party. So as we see that the audit of a company is performed by an independent party, a third party. There are certain rules and sections which is laid down by the Companies Act. So we have section 138 to section 148 of the Companies Act 2013 that talks about audit and auditors. Then there are sections from 128 to section 137 that talks about accounts. So if in order to have a detailed understanding of the sections of audits, it's better to read the sections of accounts first and then take up the audit. So now we're going to talk about section 141 of Companies Act 2013. So what does section 141 talks about? It talks about eligibility, qualification and disqualification of a person to be appointed as an auditor of the company. Now why have they mentioned the word eligibility? Why not only qualification and disqualification? That is because the word eligibility holds a relevance. How do we understand the relevance? It's from the subsection 1 to section 141. It says every person to be eligible to be appointed as an auditor of the company only if he is a chartered accountant. So what does the subsection 1 says? That the person has to be a chartered accountant to be appointed as an auditor of the company. Now are all chartered accountants eligible? We'll understand this with an example. Suppose I have Mr. A, he just gave his exams, he passed and then he took up a job in a nationalized bank. Now that he's an employee in a nationalized bank, is he eligible to be appointed as an auditor of the company? The answer is yes, he's eligible, he's a chartered accountant, but he is not qualified. Now the Chartered Accountants Act 1949, reading with subsection 1 to section 141 of the Companies Act 2013, it says that a person, a chartered accountant, after giving exams, after enrolling for the required courses, he has to obtain a certificate of practice to be appointed as an auditor of the company. So we know that A chartered accountant holding a valid certificate of practice is also eligible and qualified to be appointed as an auditor of the company. Now what is the extension? The extended part to subsection 1 reads, it says that provided where the firm where majority of the partners are practicing in India are qualified to be appointed as aforesaid shall be appointed as an auditor of the company in the firm's name. Now the extended part we are going to study a little in detail. We are going to break the extended part in parts and then study each one of them. So what does it say? Provided where the firm where the majority of the partners. We'll take up an example. I have firm A, B and C wherein A, B are chartered accountants and C is a CS or an LLB. So what used to happen initially in the Erstwhile Companies Act 1956, the condition that was placed, it says where all the partners. So the requirement of the majority, the term majority in the present act was actually where all the partners. Now when we had that condition, it made it very difficult for CAs to provide expert service. Now if I have an audit assignment of say a power generation company and I need a help of an engineer to evaluate the processes or to say test check the equipments and everything. So what a CA used to do, he used to take services of an engineer, get them evaluated, pay him and then proceed with his audit. In such a case, it would complicate the entire audit process more. With such an extension, with such a change in the act, it says by majority of the partners. So this helps the CA firm to actually include another individual or say another partner who is not a CA but holding some other degree which enables them to provide an expertise service. This has helped the client as well. They can actually come to the firm to take the services of a CA and a lawyer or a CS. This is because now these days we can have a firm which includes CAs as well as the person holding other degrees to perform the audit function. So we've studied provided where majority of the partners. Now what is the next condition? Where majority of the partners are practicing in India. That means what? These partners need to have a valid COP. A person is said to be practicing only if he holds a valid certificate of practice. So the majority of the partners practicing in India are qualified to be appointed as aforesaid. So they has to be qualified enough. We studied initially about the eligibility and the qualification. It's only when these conditions are fulfilled by the majority of the partners, the firm will be appointed as the auditor of the company. So in this situation, I can have firm A, B and C to be the auditor of a company. Now having understood that the firm can be appointed as an auditor of the company, can C sign the audit report? The answer is no. Why? This is because subsection 2 to section 141 it says where a firm including a limited liability partnership is appointed as an auditor of the company, only the partners who are chartered accountants can act in the name of the firm. Now based on this second sub clause, we know that C, since he is a CS or an LLB, he cannot sign the auditor's report. If we study the auditor's report, we know that below the report we have the signature, the initials of the auditors. It has his membership number and it says for firm A, B and C. That is because we can hold that chartered accountant responsible. So that's why any chartered accountant, a member of the firm, only he can act in the name of the firm. Although CS and LLBs, engineers and other people from other professions can participate in the audit, but they cannot sign the audit report. He can not sign the audit report. That's why the answer is yes, the firm can be appointed, but either A or B can sign the auditor's report. So the question now would arise is why a firm and a limited liability partnership? Why a limited liability partnership? We know that an LLP is also considered to be a body corporate. Now when we study detailed disqualification, we'll understand that a body corporate is disqualified from being appointed to be the auditors of the company. So why is there a mention of a firm and limited liability partnership in the second clause to section 141? Now understand this better. We know that Partnerships Act, it specifically states that a partner is no different from a firm. That means that the liability of the partner and that of the firm is joint and several. So in case if the partnership firm is liable for something and the liability has to be fulfilled, it can actually take handover the assets of the partner. But in a company form of an organization, we know there's a divorce between the management and the ownership. This is because a company itself is a separate entity in the eyes of law. So under the Companies Act, when a company is getting registered with the registrar of companies, it gets its common seal, it gets its MOA and AOA, and hence is treated as a separate company. Now if you study the section 1, it says that every person to be eligible to be appointed as an auditor of the company only if he is a chartered accountant. So in a partnership firm, when a firm is not different than a partner, can we say that the condition 1 is fulfilled? The answer is yes. But in a company form of an organization, can we say a company is a chartered accountant? No, that's not correct. Either the shareholders could be chartered accountant or the members of the company could be chartered accountants. But a company as a separate person is not a chartered accountant, although it has its common seal. But it cannot obtain a certificate of practice. And hence the eligibility and the qualification requirement for a company form is not fulfilled. And hence we do not have a company mentioned over there. What do we have? We have a firm which includes an LLP. It is very important for students to understand that firm and LLP are included and they can be appointed as the auditor, although an LLP is treated as a body corporate. After having studied subsection 1 and 2 of section 141 of Companies Act 2013, we are going to study about the disqualification that are stated in subsection 3 of section 141. To understand them better, they are supposed to be read with Rule 10 of Company Audit and Auditors Rule 2014. We're going to study about the disqualification subject to which either the auditor will stand removed, he'll have to vacate his office, or disqualification subject to which a person will not be appointed as an auditor of the company. Very first thing is the body corporate, which says excluding LLP. Now we studied earlier why a body corporate cannot be appointed as an auditor of the company. As we said that the body corporate does not fulfill the criteria of a person being eligible or a person being a chartered accountant or holding a COP, and hence the body corporate is excluded. Second, we come to an officer or an employee of the company. An officer and an employee of a company. Why do you think an officer or the employee of the company will not be allowed or should not be allowed to audit the accounts of the company? We'll take an example. We have company A, B and C and we have the director Mr. A. So the director is an employee of the company, he is an executive director. So statute says Mr. A should not be the auditor of company A, B and C. As we know that the basic principle governing an audit as stated by the Institute of Chartered Accountants of India, it says that integrity, objectivity and independence as the basic principle that governs any audit. Now there was a fraud conducted in company A, B and C, okay, and the directors were involved. Do you think if I appoint Mr. A who was actually involved in the fraud, he will issue a qualified report? He will express his true opinion? He will not. His opinion will be guided by and subjected to his own profit, to his own interest in the company. If he issues a qualified report, he would, probably lose his office or rather have his company shares come down. He will never do that. So what about the other shareholders who have invested in the company? What about their reliance? So independence is one of the basic requirements as stated by the Institute of Chartered Accountant, which will not be fulfilled by Mr. A, and hence he cannot be the auditor of the company. Then we have the third clause which says a partner or an employee of the above, which means a partner or an officer and employee of the company. Coming up to this third clause C, which says a partner or employee of the above, which means a partner and employee of the officer of the employee of the company. Now in our case, we had company ABC, Mr. A being the director. Now Mr. A was also having his sole proprietary business in which he appointed Mr. P as an employee. what happened is that Mr. P was appointed to be the auditor of company A, B and C. Now we can also see that Mr. P gets his salary from Mr. A. Mr. A is the director of company ABC and draws salary from here. So indirectly, Mr. P's judgment will be guided by whose wishes? Will be guided by Mr. A's wishes, because since he is getting a salary from company A, B and C. So indirectly, there is an indirect connection with the company, and hence Mr. P's opinion will not be unbiased, will not be clear, and hence Mr. P is again disqualified to be appointed as an auditor of the company. So we've studied three parts till now, the three basic parts. We know that a body corporate will not be appointed, but this does not includes LLP, which means a firm in an LLP is eligible. Then an officer and an employee of a company. Third, a partner or employee of the officer and employee of the company. Moving on to the condition D, what does it say? It says that a person or his relative or partner is holding any security in the company or its subsidiary company or its holding company, an associate company or subsidiary of the holding company. That means, what does it start with? It says holding any security. Now security does not only include equity shares. If it included only equity shares, the statute, the act would specifically state equity shares. What does it say? It says any security. So they cannot hold equity shares, preference shares, bond, debentures and any form of security in the company. Now why such a condition is placed? Why does a person or his relative or a partner cannot hold any security? This is because to safeguard the independence of the auditor. This is because to ensure that the interest of the auditor in the company is only restricted to his audit fees. That he does not hold any other interest in the company, so that he reports in a true and fair manner, he reports in an unbiased way to the shareholders, and hence the image or the respect for the profession is maintained. So any security, anybody holding any security, any person, he will not be allowed to be appointed as an auditor of the company. Now the extension to the clause D says what? Provided that if it's a relative, he can hold a security to the extent of 1 lakh face value. So there's a relative, 1 lakh face value. Why do you think the extension should have been provided? Suppose this condition wasn't there. We had only the first condition, which says any security held. So what happened? Today I have taken an assignment of, say, company Tata Motors. I am appointed as a statutory auditor in that company. Now with that company I am also holding 19 other companies. We know that the limit is 20. We will study that in detail. But as of now, this is one of the assignment that I have. One of my relative is not aware of the fact and he bought shares of Tata Motors in his trading. Will I in such a situation lose my job or lose my assignment? So if somebody does not know that, I will lose my job. Is it fair enough? It's not. So that's why a condition has been placed that a relative can hold securities up to rupees 1 lakh face value. We have to note that the condition mentions face value. It does not mention market value. Now to further improvise on this, what they have mentioned is 1 lakh face value. Supposedly that relative has purchased shares of, say, 5 lakhs. I will come to know of it in due time. What will I do is, I will ask him to sell off his shares to maintain the limit up to rupees 1 lakh face value. Within how many days? 60 days. I have been given a time duration of 60 days to correct my actions so that I don't lose my assignment. So for example, I have a relative who's purchased 5 lakh. I have asked him to maintain the limit within 60 days. What he does not do it, I'll lose my job in that case. I'll lose my assignment in that case. Alright? And in case if the corrective action is taken, yes, then I can continue to be performing the audit of the company. We'll study a certain examples. Examples have been picked up from the module of ICAI. Mr. A practicing chartered accountant, is holding securities of XYZ Limited having face value of rupees 900. Whether Mr. A is qualified for appointment as an auditor of XYZ Limited. Now what does it say? It says that Mr. A is holding securities worth rupees 900. Do not get confused. The condition that we studied, the extension to the clause that we studied was restricted only to relative. So relatives can hold share value up to rupees 1 lakh face value. But if the auditor himself holds any security of any value, so any security irrespective of the amount is held by the auditor of the company, he stands disqualified. So in our example, what is Mr. Conditions A's status? He will be disqualified to be appointed as an auditor of the company since he is bought the shares worth rupees 900. Let me replace the Mr. A by say his wife. Can his wife hold the shares? Yes, his wife can hold the shares because she is the relative and she is entitled to hold up to rupees 1 lakh. So we studied the first condition which said that an auditor, his relative or partner holding any security of any value will be disqualified, the provision of which has placed condition or has given leeway that the security worth rupees 1 lakh can be held by a relative, and if it goes beyond 1 lakh, the corrective action has to be taken within the period of 60 days. Now we're going to talk about the second condition which says about indebtedness. What does it say? It says an auditor, his relative or a partner is in debt to the company or its holding or subsidiary or associate company or subsidiary of the holding company of an amount exceeding rupees 5 lakhs. Why do you think such a condition has been placed? Why is a statute saying that indebtedness up to rupees 5 lakhs is okay? Or holding security of any value by the auditor is not okay and he will be disqualified? This is because there are situations or there are the way the society function or the way the commercial background function is that an auditor may or may not be in debt with the company. Take an example, I am appointed as an auditor for Vodafone. I am using their services, I have a postpaid plan. So I use their services and they start billing. They start charging me for the services. Now just because I am their auditor, I won't be given free services. I'll have to take a SIM card, I'll have to pay amount. So what happened? I used their services and my bill came up to rupees 25,000. So the month my billing cycle has started, I have not paid this amount in the due date. In such a situation, am I in debt to the company? Yes. Am I liable to pay the company? Yes. So that's why this condition has been placed that indebtedness limit up to rupees 5 lakh is allowed. Remember that Vodafone, banks, etc. are certain businesses, are certain clients that an auditor might be in debt to them at a point in time. This will result in his disqualification and then he is allowed to be still continue working as an auditor of the company. Talking about the guarantee. The guarantee clause, it says what? Guarantee given in excess of rupees 1 lakh for a third person by the relative, auditor or his partner will stand him disqualified. So we study three conditions: any security, then security to be held by the relative up to rupees 1 lakh, indebtedness to the limit of 5 lakhs and guarantee to the limit of rupees 1 lakh. Clause E, a person or a firm whether directly or indirectly has business relationship with the company or its subsidiary or its holding or associate company or subsidiary of such holding company or associate company of such nature as may be prescribed. Moving on to the next condition, it says that any person having business relationship with the company will not be eligible or will be disqualified to be appointed as an auditor of the company. Now, business relationship in the proviso, what does it say? It talks about nature of commercial transactions. Why do you think this condition has been placed? So any individual having any business relationship or the commercial transactions and dealings with the entity and the company will not only have an interest in the company, but his opinion again will be deferred or will be guided by his own other interest. We know that auditor's interest in the company should only be his audit fees. In order to safeguard that condition, statute has placed a requirement that he should not have business relationship with the company. That means he cannot be a debtor, he cannot neither be a creditor of the company. Say for example, I am selling goods to a company called ABC. I am appointed as an auditor of that company. I will never issue a qualified report for that company. This is because qualification about their performance, qualification about their financial statement will have an impact on my business. I might lose my business with them. So in order to safeguard, the basic principles have been laid down, independence being one of them, and to safeguard that independence, the clause was inserted. But let's take an example of the airlines. We've read about the example in the proviso. Let's pick up, say, Jet Airways. Now I am appointed as a stat auditor for Jet Airways. I want to travel from India to UAE. I can never book Jet Airways. Considering this condition, I can never travel by Jet Airways. In the similar situation, I've taken up audit of 3 other airline companies, say Etihad, Jet Airways and Indian Airlines. I can never travel by these 3 airlines. Why? Because of this condition. Thus, a detailing has been provided to state that where the commercial transaction are in the nature that of day-to-day business are at an arm's length price and hence will be excluded. So what is the condition? If I'm doing business, if there is a give and take, sale and purchase of the goods or the products or services at an arm's length price or in the ordinary course of business of both the parties, such transaction will be excluded and will not be considered to be the business relationship between the entity and the auditors. Moving on to the professional service condition. Now we know that the services provided by the auditors to the company are actually professional service. If I do not include this, if this condition was not included, from the very nature of the service, the auditor will lose his job or lose his assignment. So I'm appointed as an auditor of the company. I'm eligible and qualified, I'm appointed. I'm providing them service, I'm disqualified. This does not make sense, right? So it says that professional services in the nature of commercial transaction will also not be considered. Now we'll study about the clause F, which says if the person or the individual's relative is a director or a key managerial personnel of an entity, that individual will not be allowed to be the auditor of the company or will be disqualified. Say for example, I am appointed as an auditor of XYZ Limited and my brother is a director in the same company. Now it is more than obvious that to safeguard my brother's job or to safeguard my brother's company, I will never issue a qualified report. Again, the question of independence come into picture. We should know that a large amount of people or a large part of the society invest their money in the business, invest their money in the companies. They solely rely upon the auditor's judgment and his opinion about the financials of the company, and then they take their investment decision. Not only those section of the society, but also banks, NBFCs, lenders, creditors, they also take the financial as a back support and then take their investment or lending decisions. Even the smallest supplier will first evaluate the credibility of the company, and to evaluate the credibility he will refer to what? He will refer to the auditor's report and the financial statements. So we know that a large part of the society has placed their reliance on the auditors. It's because of this that the auditors have to perform their duties in an integrate, objective and an independent way. So the independence of the auditor should not only be in the mind or should not be a superficial matter. It should become his own character, and that should be depicted in the way of his working. That should be depicted to the public at large. And hence such conditions have been placed by the statute to make sure that the independence is maintained and that the reports are true and fair and that the reliance can be placed on such a profession. So what does it say? If a relative is a director or a key managerial personnel. Key managerial personnel is somebody on the basis of whom the decisions are taken, the one who decides about the company, his plans, objectives. He's a key manager personnel, like a very important person, just like a director. So if my relative is either a director or key manager personnel, I will not be allowed to act as an auditor of that company. Moving on to the conditions of 20 and more companies. Why do you think an auditors will be restricted to take up any audit assignment above 20 companies? This is because the statute and the Companies Act and the government at large wanted to ensure that the quality of the audit was maintained, that there was no compromises done, that all the substantive procedures to be done by the auditors are actually done by him, that the assets were verified, liabilities were checked, and that no work was done in a haphazard manner just to issue the audit report. So for the quality purposes, this condition have been placed in picture. Age, convicted of an offence by the court. Chartered Accountants Act of 1949 have issued Code of Ethics. Code of Ethics have the first and the second schedule. It mentions the acts or it mentions the conditions subject to which any of those fulfilled, the chartered accountant will be assumed to have convicted an offence and then will be disqualified. Convicted of an offence by the court. Why do you think anybody would want to rely on a person who's done fraud himself? Thus, to ensure that the integrity of the profession, to maintain the respect in the general public's eye, this condition has been placed. But it is also important to understand why the person. Now, what happens is, if I have a firm A, B and C, Mr. A was involved in some fraud. He was convicted by the court. Now, will it be right for me to say that firm A, B and C will not be appointed as auditor anywhere? So why should Mr. B and C suffer? In that case, we should reread the condition which says the person and not the firm. Firm can still continue in practice, but the person who is convicted of an offence, who has been charged of any offence or is guilty of any offence, will not be entitled to take up an audit of any company. So now we know that section 144 of the Companies Act is a new provision. It has listed down certain services that are not to be performed by the statutory auditors. Now why is that so? So I have taken up the very first condition or the very first service which says internal audit. In my example over here, I have Mr. R who is appointed as a statutory auditor for Messrs. ABC and Company. So ABC and Company, when he was appointed as a statutory auditor, at the same time he was doing the internal audit as well. Internal audit assignment would fetch him 50 lakhs. Statutory audit assignment would get him another 50 lakhs. What if he was not convinced by the financials of the company, or what if at the year end when he was evaluating the balance sheet, records and the document, he found weaknesses in the internal control? He would go back to his own report of internal audit. If he did not mention those facts in the internal audit report, he would have the second thought of mentioning those facts in the statutory audit report. This is because it would give an impact on his own services provided to the company. In that case, his decision as a statutory auditor will be affected. Say for example, he was genuine enough and he actually mentioned the fact of weakness in the internal control. In that case, the company would actually think of taking him to be the internal auditor, so which would lead him to lose his internal audit assignment and a sum of 50 lakhs. In such a situation, Mr. R would always ensure that to safeguard his own pocket or to safeguard his own interest. In that case, the public at large will be affected. The shareholders and the stakeholders will be affected by such a report by Mr. R. And hence, certain services were listed down to make sure that the independence of the auditor is enacted, or the independence of the auditor becomes a part of him or his performance as an auditor during the period. Section 144. An auditor appointed under this Act shall provide to the company only such other services as are approved by the Board of Directors or the Audit Committee, as the case may be, but which shall not include any of the following services, whether such services are rendered directly or indirectly to the company, or its holding company or subsidiary company.
namely accounting and bookkeeping services, internal audit, design and implementation of any financial information system, actuarial services, investment advisory services, investment banking services, rendering of outsourced financial services, management services, and any other kind of services as may be prescribed.
We've discussed Section 141 of the Companies Act 2013, which talks about eligibility, qualification and disqualification of a person to be appointed as an auditor of the company. We studied subsection 1 and 2, which talks of eligibility and qualification, and then we had subsection 3, which talks of disqualification. One of the clauses, clause 3G of section 141, which spoke about a disqualification wherein an auditor takes up an assignment exceeding 20 companies. That means at any given point in time, the auditor has to ensure that the total audit assignment undertaken by him does not exceed 20. Now, why do you think such a condition has been placed on the auditors, or why the limit of 20 has been decided by the statute? We know that a lot of people at large, a lot of stakeholders, banks, NBFCs, governments, they invest a lot of money in the company. They give the scarce resources to the company to function, and the reliance upon the company is placed with the help of the auditor's report. Now, what if the auditor can take up as many number of audits as possible? As an auditor, I would want to increase my revenue, so I'll take up as many assignments. Given a chance, I'll take one audit a day to increase my pocket money. So what happened is, the government thought this is not a very feasible way. There has to be a limit wherein the auditor can actually take up the audit assignments, and the limit was fixed up to 20. So audit of 20 companies can be taken up by an individual auditor. This will maintain the quality of the audit. The special attention will be given to each company. All the substantive procedures and the detailed checking that has to be done by the auditor will be taken care of. So, considering all of this, a limit of 20 was placed. To add on, we can study the Chartered Accountants Act of 1949, Code of Ethics. So, the Code of Ethics issued by the CA Institute, mentioned under the Chartered Accountants Act, have two schedules, Schedule 1 and Schedule 2. There are certain conditions or situations mentioned in those schedules, the performance of those conditions will lead to unprofessional attitude or unethical behavior by a chartered accountant. And to mind you, those performances are actually subjected to punishments. One such clause 2 of part 2, second schedule of the Chartered Accountants Act has a mention that if a CA undertakes an assignment such that the total number of assignment exceeds 20, he will be deemed to have conducted a mistake and hence he will be punishable. Considering such a stringent requirement placed on the auditors, any auditor, before he starts up an audit, he has to give a certificate to the management that the total number of assignment after including the assignment offered to him will not exceed 20. Let us understand sealing the number of audits with the help of an example. I have Mr. A, who is a partner in firm A, B and C, A, X and Y, and A, P and Q. Now, what does the Act say? That the total number of assignment taken by an auditor should not exceed 20. Now, such a limit, mind you, has been applied or has been put on an individual and not on a firm. So, individually we are supposed to calculate. So, if I have Mr. A who takes an audit on the individual capacity, say 2. So, when we talk of assignments in ABC, AXY and APQ firm, these are the assignments that Mr. A has to sign. Mr. A signs 10 audit reports on behalf of firm A, B and C. 5 audit reports on behalf of AXY and 3 audit reports on behalf of APQ. AXY 5, APQ 3. So the total number of assignments are 10 plus 5 plus 3 plus 2 comes up to 20. Now our new company, say Priyank Limited, has approached Mr. A for an audit assignment. They want Mr. A to audit their accounts. Can Mr. A take up the assignment? The answer is no, he cannot. Why? Because considering each audit undertaken by the company is already meeting the criteria, he cannot add up one more assignment. He has an option to give up one company and then maybe he can take this. Unlimited, unaware of the fact, they have appointed Mr. A to be their auditors. Mr. A started performing audit and reviews of their documents. In such a situation, Mr. A has done a misconduct. So what will happen is his office of the auditor in Priyank Limited will be deemed to be vacant on account of casual vacancy. What was the safeguard that Priyank Limited could have used? Is that they could have obtained a certificate from Mr. A stating that he does not have any audit assignment which exceeds the limit of 20 and he is eligible enough to take the assignment of Priyank Limited. So this was about the sealing the number of audits.